Hi guys, welcome to this Money Control live stream. You're watching IPO Watch with me, Nandita Khemka. Well, it's been a busy week, in fact, busy month. If you look at the IPO pipeline, yesterday we had Tata Capital, and today, of course, the much awaited LG Electronics. We are focusing in on this issue. It's an 11,600 crore rupee IPO that has opened up for subscription. It's a common household name and one of the most awaited IPO of the consumer electronics giant, and it also marks one of the biggest listings from the home appliances segments this year. Now, it has already raised 3,475 crore rupees from 149 anchor investors. It's an elite list that includes marquee global names like Goldman Sachs, BlackRock, SBI Mutual Fund, HDFC AMC, ICICI Pru, Nippon, Axis. These are a whole host of domestic mutual funds that have participated in this IPO via the anchor book. Let's understand the post-IPO roadmap as well. Joining me to discuss this are Sanjay Chitkara, Chief Sales Officer, and Atul Khanna, who is the Chief Accounts Officer of LG Electronics. Gentlemen, thanks a lot for taking out time and joining us here on Money Control. Sanjay, I want to come to you first. Congratulations on the IPO. It's a good start. You've got marquee global and domestic names participating. What the street now wants to know is, where will the next leg of growth come from? And are you well capitalized for your future growth plans?
So, before coming to LG's plan, let's not forget that India is growing, and currently it is a 41 billion TAM, and it's growing with a 14% CAGR growth as per Red report, and by 2029 it will become 73 billion TAM. And India, the way urbanization is happening and premiumization is happening, currently the premium rate is 17%, but it is expected to grow around 25 to 27% by 2029. LG being a premium brand, we believe that we will be the biggest beneficiary of this premium drive and growth. And let's not forget that India is highly underpenetrated. The products like microwave, just 4% penetration, air conditioner, just 12%, washing machine, 21%. So we are sitting on a tip of iceberg of a massive explosive growth. So our idea is that being a big premium brand, we will take our premium products to larger mass consumers, and we will increase the access of our premium products by improving the affordability. This will bring a new momentum in our growth. Apart from this, we are coming up with our third plant, which is our preparation for future with a 5,000 crore rupees investment in Chile City. And this is also our preparation for future export. Currently, also, we are doing some portion of our revenue comes from export. Apart from this, we are scaling up our B2B business and the service business, which comes through AMC business, annual maintenance contract. So these are our growth strategy for future.
All right. So you mentioned about the Andhra unit as well. What's the timeline like and capacity for this facility, and how much of your future growth will come from exports?
So we did the groundbreaking ceremony this year, May. This project is not on a conceptual stage. It's turning to concrete, and we are targeting that by next year, Diwali, we will start the first line of production, that is air conditioners. And phase-wise, we will extend other lines also. By 2029, we'll finish this project. Currently, whatever capacity we have, our both plants, Noida and Pune put together, we are just doubling the capacity. Talking about export, if you see our current plant, Pune is near to western coast of India, and this plant, Sri City, is much closer to eastern coast of India. So by this way, we have covered both the coast of India, and the logistic barrier which we had, we have recovered. Currently, our revenue from export is 6%, amounting to 160 million US dollars, and we grew roughly around 45% over last year. We are exporting to Southeast Asia, Middle East, and some African countries. But going forward, we have recently started premium product production also in our Pune plant. So we will add up some newer product categories and newer geographies in our export portfolio.
Sure. We'll talk about product categories in just a bit. Coming to you, Atul, Promoters are offloading a 15% stake through this issue, right? Could there be any further stake dilution in the near term or the medium term going forward?
See, firstly, there is a 15% dilution of stake in LG India's entity.
Hmm.
And SEBI rule says that one has to dilute in a span of next 3 to 5 years, basis their new guide, to dilute up to 25%. So we'll follow the SEBI guidelines. We are highly
Hmm.
governance company, so we will follow the SEBI guidelines.
Hmm. Got it. Got it. Atul, also the fact that it's entirely an OFS, so no fresh proceeds will be coming to the company. All the expansion plans that Sanjay just highlighted, how would you be looking at funding that?
See, we are still here in India since last 28 years. And we are
Hmm.
fully dependent on our parent in terms of technology. What we share, we will share with them on the basis of our Indian consumer insights for the products we manufacture here, and parent developed that. So we are still here since last 28 years. We are getting all support from parent. And going forward, in terms of our new capex requirement, we are highly cash generative business. We are generating free cash flows year on year. And currently,
Hmm.
we can say this
Sure.
only, that we would be utilizing from our internal accruals. We are rich in cash and a healthy balance sheet. So we would be utilizing our
Hmm.
reserves for that.
All right, got it. Internal accruals, you'll be funding your expansion plans via that. But I have a lot of questions with regards to financials, Atul. So I would be racking your brains a bit more here. In terms of your profitability between FY23 and FY25, revenue grew at a healthy CAGR of 11% almost, while PAT expanded nearly 28%. What drove this profitability, and are the levers in place to maintain these rates?
The margins are always a combination of some key factors, right? Firstly, on the top line
Hmm.
side, when it increases, as you rightly said, 11% CAGR growth, 10.7% precisely CAGR growth we got over the last 3 fiscal years. And this top line increase will give us a benefit to leverage on our fixed overheads cost. Secondly, on the we are building our better economy of scales in our all across all product segments, and for a optimize and going for an optimized procurement along with the localization rate enhancement year on year. Currently, our localization rate is 54% for fiscal year 25, and it is growing over a pace of good pace over the next coming period 3 years. We would be touching, maybe I will not categorize exact number, but we would be increasing our percentage by 2 to 3% each year, which will reduce the macro
Okay.
headwinds of global, as well as FX burden also will reduce. So this way, and adding to our, as Sanjay ji explained about our strategy, B2B business exports all will be growing. So this will, as well as the lastly
Hmm.
on the revenue, new revenue stream of annual maintenance contract income. So this will give us a better edge on the margin side as well.
Sure, a better edge on the margin front as well, but there is significant disruption threat across home appliance categories from local players as well. How do you see the competitive landscape evolving? Are your margins under threat because of that? Sanjay, I would like to come to you for this.
See, competition is an inevitable part for any business, and we
Hmm.
have always welcomed the competition. And we see competition as a catalyst which drives the innovation and customer focus from us. When we started our business 28 years ago, even that time there were two local players were there, and they were very dominant. So we encountered all era of competition, and we have successfully achieved 28 years after our leadership position. Even this year, we improved our market share for refrigerator 1.5%, TV 1.5%, washing machine 0.1%, AC 1%, and microwave oven 1%. So a brand
Hmm.
which number one in India and improving market share even after 28 years, it shows that we have achieved this leadership by continuous effort, by our hard work, not just by short-term disruptions or overspending in marketing. We believe we will strengthen our market leadership going forward because we still feel there is a tremendous scope of our market share improvement in India.
All right, tremendous scope for improvement in market share as well. But I would also touch upon how your market share has panned out over the last 2-3 financial years. But before that, since you're talking about the financials, Atul, the return ratios between your company and the competitors, yeah, you have, which is listed, is significant. What, according to you, is causing this vast divide, and how much of it is sustainable going forward, according to you?
So, as you are comparing with our listed peers, I can say that
Hmm.
our fundamentals are strong, and major impact is the differentiation is our product efficiencies, optimum product mix, channel mix, and our all key components like heart in our body, human body. We develop all key components
Hmm.
of our any product in our in-house factories. So that is a more giving us a competitive advantage of getting more margins. And I will say, and apart from that, there is another operational excellence in our operating overheads as
Hmm.
well. We manage our operating overheads based on each and every expense. We do lot of ROI based investments as well as get all operational efficiencies we work upon.
Sure. The company actually procures somewhere around 54% of components in-house, as you mentioned, but it has, of course, indicated that it will be sourcing raw materials from suppliers in countries outside India as well. So, what is the percentage of raw materials that you would be sourcing from overseas?
So if we see 54% is the localization rate, and
Hmm.
it also hover. Sometimes we in the first quarter we touched to 58% localization also. There are few things like India is not a copper producing country. So for copper, we are solely dependent on import as well as semiconductors and some part of open cells. But recently, we
Hmm.
have started procuring open cells also from India. And the best, which is our biggest strength of LG India, is that major key assemblies and major components we produce in-house, like refrigerator
Hmm.
compressor, air con compressors, PCBs, some heat exchangers, clutch assemblies. We all these things manufacture in-house, which gives us a competitive edge and better margin.
Hmm. Okay.
And for
Okay.
post,
That's about.
now we keep on increasing our.
Go ahead. Go ahead. Please go ahead.
So we will further committed to improve our localization, and for every year, two three
Hmm.
percent localization, we will keep on improving.
Okay, okay. Focus will be on localization. Atul, one more question in terms of your return on capital employed. It has jumped up nearly 10 percentage points in the last 2 years. What happened here? Can you explain a bit?
So, as you rightly mentioned, that it has grown by almost 10%. You rightly said. Our current rate of ROCE is almost 43% plus. And if we talk about it, is
Hmm.
a combination of our consistent earnings, which has given us an edge to enhance this particularly our ROCE. So that is a major impact of our earnings.
Sure, sure. Also, in terms of royalty payments to the parent, it has averaged, I think, 1.9% of revenue over the last 3 years. In the RHP, I was reading, promoter can increase it to 5% without shareholder approval. Do you expect it to increase from the current levels of 1.9% going forward?
So, royalty rate cannot be increased so easily because there are other transfer pricing as well as tax regulations comes into the picture. So we are not forcing
Hmm.
any such particularly going forward in couple of years change in the royalty rate. We have just settled down our some transfer pricing adjustments 3 years, 2 years back, effective 1st January 2023, and we are not forcing any such change going forward period in couple of years. But we have to abide all tax regulations, tax laws. So as and when something change will happen, then we will take a cognizance call considering all risk factors also. Currently, there is no such plan.
Hmm.
And we have changed that
Okay, okay.
royalty
No
rate, what I
such plans
mentioned
of.
is almost more than 1.5 decades late. We have changed first time only this
Hmm.
royalty rate. And it is a very minuscule
All
marginal
right, all
impact.
right. Sure. Okay. So royalty rates, going up from here, kind of ruled out for now. But Sanjay, coming to you, I think in your previous interviews, I've seen you've said that air conditioners will be the fastest growing category, but AC sales have been under pressure industry wide, right? Due to unseasonal rains and demand, of course, has taken a hit. What makes you think that this will be the fastest growing category?
The first thing which I want to clarify, despite of all seasonal changes, LG grew in
Hmm.
double digit this year. And I'm talking about calendar year. And if you refer
Hmm.
to the retail audit report, which every brand refer, though the industry minuscule degrew, but LG shown a growth in sellout also, and we improved our market share by 1%. But we feel that AC is very highly underpenetrated in India, and there is a lot of upgrade as well as first-time buyers are there. India is a very big country, and our tropical and monsoon weather is very favorable for AC business. And see,
Hmm.
we have a very diverse regions with a lot of variation in temperature and monsoons. While some regions are showing cool summer, one or two reasons definitely fire. I mean, because the country is too big, and we believe
Hmm.
this category will keep on growing. And with the recent rationalization of GST from 28 to
Hmm.
18%, will further boost AC
Yeah.
demand in India. Next year,
Hmm.
new star ratings will come. POB is changing their guideline. So all these
Hmm.
factors, regulatory shift, GST reduction, India's tropical weather, and low penetration will keep driving AC high demand, a robust demand in coming future also.
All right. Of course, the GST cuts will also benefit sales. For this year's Diwali sales post the GST cuts, what are your expectations, Sanjay?
Yeah, so Diwali sale is very encouraging. We finished a Navratra sale, which has high significance in our business.
Hmm.
The most encouraging part is so the direct beneficiary products were refrigerator, TV, dishwashers, and air conditioners. So there was a natural demand for these products. But the most encouraging part is that dishwasher, which is highly underpenetrated, or is not popular in India. We have seen a very good interest in customer. Their GST has been reduced. And for this, we have
Hmm.
introduced an Indian side dishwasher, which is more suitable for large utensils and greasy cookware with foldable racks. And so this is doing extremely well. Also, Diwali also trigger a lot of celebration, festivities, a lot of cooking occasions and parties. So we have
Hmm.
also seen a surge
Hmm.
of microwave ovens and audio devices like party speakers, sound bars. We have recently also during Diwali time we introduced a new microwave oven which has a built-in feature of air fryer also.
Okay, a new microwave with a built-in feature of air fryer as well. At the heart of LG, in fact, I think is the one brand that has been driving innovations. So, aside of that, I also want to talk about some of the other categories where you've seen some bit of a loss in market share. If you see the last 3 years or so, Atul, my question to you is: of course, you already rank or lead among the top three in most segments. Room ACs, TVs, refrigerators, washing machines, microwaves, etc. But over calendar year 22 to 24, your market share in select categories has come down a bit. What could be the reason behind that? What would you attribute it to?
Sanjay ji, you would like to answer this?
Yeah, yeah. So see, LG is a very large company. We are operating at a scale of 2.9 billion. And for such a large company, the growth trajectory cannot be a straight line. It cannot be a linear. And there
Hmm.
would be always some fluctuation. And we are a very profit focused company also. And in our past, we have taken some bold decisions for our capacity constraint and profit consideration of optimizing our product portfolio. So you might have seen some fluctuation here and there. But very important thing is that we never lost our leadership. And in
Hmm.
2019, we were number two player for TV and refrigerator. For washing machine and other products, we were always number one. But now, from last 2 years, we are number one for refrigerator and TVs also. So our leadership is
Yeah.
across all product categories and not only volume but premium zone. Our premium zone shares are much stronger. So the main thing is we are not
Hmm.
only growing, our shares are sustainable, we are maintaining our leadership, but as well as we are generating cash. Just increasing
Hmm.
shares and losing money is not our deal.
Okay, last couple of questions then, Sanjay. This again coming to you for this. As you mentioned at the start of the interview that you've been in India for 28 years, and innovation, of course, has been at the heart of LG's success. You've also introduced India's first smart TV in 2011 to the 4K OLED TV in 2015. Of course, you mentioned the microwave with a built-in air fryer as well now. So, what's next on your innovation roadmap, especially in AI-enabled and connected home products?
So our all innovations are not based on reducing the cost of a product only or improving the affordability. We continuously work to
Hmm.
improve the ease of usage. Not only this, we are working hard on design also. Recently, we introduced Objet series for our appliances, where we have used 27 new urban and pastel colors. It's inspired by a French designer. Apart from this, we are focusing on energy efficient products and IoT based product. Thingy is our integrated app which connects all the products together. And our IoT AI is based on three strong pillars. First is ease of usage, giving voice command Alexa and Google Assistant. Other than this,
Hmm.
giving energy efficiency, like recently in our ACs, we introduced Energy Manager. And third one is predictive maintenance. Our products comes with the self-diagnostic, which diagnose the fault of
Hmm.
product and also fix a meeting and call with our service center.
Hmm. All right.
So I'm very
Last two
passionate
questions then. Sure, please go ahead.
talking about our products. If given the opportunity for 24 hours, I can explain you about our.
It's understandable. It's understandable. Of course, since I was just reading through your RHP as well, where you outlined the fact that the consumer durables market will double to somewhere around 6.2 lakh crore rupees by 2029. How are you planning to consolidate your leadership position, and which category, of course, will be the fastest growing there? We were talking about room ACs. Would that be one engine?
Yeah, ACs as well as B2B and service business. See, we have great products in B2B. We have HVAC and information display panels, e-blackboard. See, going forward in future, maybe every classroom will have e-blackboard. So this is the future where
Hmm.
we are focusing a lot. Currently, our B2B business revenue is 8% of our total revenue. But we have great
Hmm.
product. We are not only a hardware selling company, we are a solution selling company. We have created a
Hmm.
B2B experience center across all major cities, six experience centers we have created. And our HVAC, we are already compliant to BIS. So when very soon the star rating will come for HVAC also,
Hmm.
we are fully
Hmm.
prepared for that. We will also get a beneficiary of inverter transition in commercial LCs because we are
Hmm.
inverter company. And lastly, our biggest
Yeah.
strength is our local manufacturing. Up to 86-inch information display panels, we are manufacturing in India only. That is our biggest strength.
Hmm.
And adding to what
All right.
Sanjay ji said
Manufacturing in
on
India.
exports, exports also would be a very growing market as we are building our capacities
Hmm.
in through our third plant. That is also another growth engine for us.
Okay, exports will also be a growth engine, and of course, making in India is also one side of it. But one more thing that I wanted to ask was, in terms of rising middle class aspirations, that will drive demand for premium products, and that would lead to higher average selling prices as well. So, do you have strategies to capture this growing premium segment? Also, the fact that there was a slowdown in urban consumption demand post the tax cuts that were announced in budget and now the GST cuts. Are there visible signs of improvement in urban consumption demand as well? Sanjay, if you would like to take that.
Yes, post GST cut, there are very encouraging spike in demand we have observed, and we believe that it will not stop till Diwali. And post Diwali also there is a strong wedding season, and for Hindi speaking belt, that weddings also drive gifting, a lot of gifting for our products. So this demand will continue. And next year, as I mentioned, new star rating will come. That will also drive the demand.
Yeah.
Now, what next part of your question?
The average selling price and the strategies for LG in place for capturing the demand for premium products.
So we are a strong player in premium. Our OLED shares are 62.9%, and our side by side is also touching 44%. If we talk about our five-star shares are 27%, whereas our overall inverter AC shares are 20.6%. So when it comes to the premium product, LG is the first choice for consumers. Now we want to increase the access of premium product to the larger customer base, and we want to take these premium products to tier 2 and tier 3 town. So we are working on value engineering, and very soon. So currently on this platform, I cannot share all detail, but very soon we will connect with you with the details, exact details, launching date, and product description and price points, and we will surprise the whole market.
Okay, expect positive surprises from LG Electronics, going forward. But last question, really coming to you, Atul. Priced at about 35 times FY25 earnings, it's a little conservatively priced, right? Your IPO. What message would you like to give to your prospective shareholders?
See, IPO pricing, particularly if you call it as, it is based on some two key factors. One is the market sentiments and another is the fundamentals. Though our fundamentals are very much strong, as consistently growing with a good CAGR, with the improvement in profitability over the last 3 years. And we can call it as here is that there is a good room for the investors, which we have left over for them on the table. So they should join us in our new growth story journey. So we can welcome them. This is a message from my side.
All right. Sanjay, anything you want to say to your prospective shareholders?
I mean, it's a very good opportunity to join us our future growth journey. And from today, we are preparing for LG Electronics for next phase of our growth. And we are very excited.
All right, we'll be watching out for the next phase of your growth, and of course, I will be looking forward to more interactions with you now that you will be a listed company. So every quarter, you can expect a call from us, and we will be discussing your financial performance as well. But for now, I would like to thank both of you for taking out time and joining in. All the very best for your listing, and it was great chatting with you guys. Thanks a lot for joining in. Well, with that, we've come to the end of this edition of IPO Watch. That was the management of LG Electronics, a household name, so to say, and the most awaited IPOs of this year. But with that, completely timed out. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates. Thank you for watching.